Hey guys, welcome to another video. And in this video, I'm going to go through everything you need to know about the interest rate decision coming out tomorrow for the Canadian dollar. I'm going to go through all of the highest probability setups that I found, and the highest probability setup that I found, which is CAD CHF. I'm going to go through all the do's and don'ts, and I'll take it from a technical standpoint, also fundamentally, because both are important. And my aim is to give you the best of what you need in order for you to have a prosperous trading career. So let's get started. All right, so looking at what we've got here with CAD CHF and the rest of the pairs, there are really good setups that are happening pre, high impact Canadian dollar interest rate news in this case. And that's usually a very common pattern. I'll just call it a pattern. A very common pattern or occurrence that happens when we have high impact news happening. Because at the end of the day, these high impact pieces of news have the ability to cause the price to go to places that are already predetermined for institutional money and governmental money. And so in order for those scenarios to find expression, you're going to need high impact news. Okay. And this is an important key that I want to understand. All right. So looking at what we've got going on in terms of price action here, there's a lot going on, but I do want to bring up this point first before I get there, and it's to do with the actual news. So let's have a look at the news first. Now, your tomorrow might be different from my tomorrow, but I believe that for most people, apart from maybe those of you in Australia, the news for you should be Wednesday. And if it's not Wednesday where you are, then it should be Tuesday. Okay, but either way, it should be Wednesday for everyone. Okay, nobody should be seeing this news on Thursday, otherwise you're a time traveler. Anyway, so I'm going straight into the news. Now, it's Wednesday, March the 8th at 3 p.m. UK time. Now, I'm not sure yet if you've noticed that I'm from the UK by my accent, but for me, at my time, it's 3 p.m. in the afternoon. We're going to have the Bank of Canada interest rate decision. Now, what I do want to hone in on, and which is mostly something that I have this touched on in the previous Canadian dollar video, but I'm going to refocus on. All right. Now, if you look at the consensus and previous, for those of you who watch the news regularly, you notice that this is actually somewhat of an anomaly in the recent, what can I call, consistent rate hike that we've had for interest rate decisions. Almost every major bank around the world has been raising their interest rates progressively since I'll say 2021 for sure. We've had interest rate hikes continue to rise and rise. We were at 0.25%, or 25 basis points during the height of lockdown. Some countries even having zero interest rates like Europe. And from that, we've gone all the way to 4.5. Now, specifically for Canada, they've done a 425 basis point increase. So they've increased their interest rate consecutively by 4.25%. Okay, from the lows of 0.25% during lockdown. Okay, March 2020 to March 20, I'll say to 2021 near the end or towards the end, somewhere along those lines. So anyway, one of the most important things for those of you who follow interest rate news, you realize that it seems as though the previous and the consensus now, the consensus is this figure comes from a group of basically analysts, and there's maybe like a short list of about 7 to 10 around the world who are the top of their game, and they all give out their different figures of what they expect their, some sort of news piece to be. That's really their job. Okay, and then, Forex news outlets like these take that data and give it to us. So in essence, what this means is looking at the consensus and the previous, and I'm going to talk about what Governor Tiff has said. Now, Governor Tiff Macklem, he says something very important in the last interest rate hike, which happened, which was that there is a conditional pause that they've all agreed on within the Bank of Canada governors and delegates and stuff. And this conditional pause is based on one condition. He explicitly said in summary that if interest rates have successfully started to cause inflation to reverse the other way or go to back down towards 2% or just start to decrease in any noticeable or significant measure, then interest rate hikes will be paused. Okay. And it's very interesting to see that the consensus, which institutionally the name is called a whisper number, has stayed at 4.5%. And what that means is that the consensus of the major analysts is that we are going to not have an interest rate hike. And so there's enough sufficient evidence within the Canadian economy that inflation is actually going down, which means the interest rate hikes have actually had a positive impact to start to push inflation back down to where they're looking for their target of 2%. Okay. Now, bearing that information in mind, what does this mean for the price? Now, before I do the technical analysis, I want to reference this. Now, what does this mean? It means one thing. If the interest rate news, the actual data comes out to be 4.5%, it means the Canadian dollar will become strongly bullish. And the reason is very simple. You know, to one extreme during lockdown, any country who had an increase in interest rate had a bullish reaction in the market. And the reason is because the overarching sentiment at that time was inflation is low because the economy is not expanding. And when economies don't expand and when there's not, the GDP is actually reclining or going down or not changing, you know, interest rates are kept low to encourage borrowing and to encourage money to be spent to bring productivity, and productivity translates to GDP, and then the economy starts to have more vibrancy, and that's the snowball effect it has. So during the lockdown period, and I've been studying news for many years, anytime any country, you know, increased their interest rate past 0.25%, it did cause a reaction. It did cause that currency to become strongly bullish in the market. Now, the reverse is true. Now we're on the other end where we have super high inflation, which I believe is going to continue persisting for a while, but we have really high inflation. And now any country who at least keeps their interest rates the same or maybe even reclines back down by a few basis points gives off a bullish signal. Okay. So it's kind of crazy, like, you know, from one extreme to the other. But when I put the fundamental infrastructure there, I hope it helps you to understand what's going on. So for me, the Canadian dollar now, of course, the rate statement might have an effect and cause the reaction to be. Now, because the rate statement is a physical document, it may take a while for the rate statement to have an effect on the market. What the market will be reacting to immediately would be the figure itself and how it's perceived. Okay. Now, translating that into price action now, I'm going to show you the high probability trades I have. And remember, for me, and it should be the same for you, Forex is the largest market in the world, and it's a market where there's a lot of secrecy behind it. You can't really see all the blocks unless you use price action to look at it. You can't really see how many buyers and sellers are moving money around. You can't see institutional money without understanding, you know, the differences between wicks and the lengths and different price action movements that occur. So in order for you to be able to have success with Forex specifically and especially, you can't use fundamentals as your foundation first. It has to be technical. The reason is that price is the best indicator to let you know where money is moving to, because wherever money is being moved to by institutions is the kind of money you need to be following the direction. Okay. And I'm going to translate that into price to explain the diagram you saw at the beginning. So switching over to the charts now, let's have a look at where we are. Now, CAD CHF is such a beautiful trade and the highest probability trade out of all of the trades. And I am going to do a breakdown, but I'm going to stretch across for us to look at what the dynamic of price is right now. And as I'm speaking right now, it's 3 p.m. We do have Jerome Powell testifying, which means that as you can see here, we're having a very strong reaction in the market. Now, to me, this is manipulation most definitely. I know it is manipulation simply because it's only been 1 minute and it's impossible for him to say in 1 minute something that will cause the market to crash. So this is kind of what I would call artificial price action. Now, you know, USD CAD and other CAD Canadian dollar pairs. Now, you'd be surprised. USD CAD is usually one of my favorite pairs, but I'm actually not focusing on USD CAD really right now. All right. But just looking across the majors here, I'm waiting for price to pull back here. If you've been following my videos on the game plan videos, then the price is following through the game plan pretty nicely. You know, I guess my only pain is that I was looking at gold yesterday. I was looking for the M15 entry instead of the H1. I should have just took it again, and I would have had all of these pips today. Unfortunately, the price has kind of gone ahead and done the movement without, us. But it's fine. We could see Bitcoin is even dropping short. All right. The dollar is gaining strength in that regards, but this won't last forever, I don't think. We still have more. There's one more long that we need, but this is not a surprise to me that the price will do what it's doing. Okay. So I'm really just preparing myself for what's going on. So looking at Canadian dollar news and what we have now, my bias is not bullish or bearish. It's just that looking at the news, if the interest rate is 4.5%, it would give a bullish reaction. And of course, if it's even lower than that, that could be even more bullish. And to be fair, if it's hiked and it's 4.75%, we'll have the opposite effect. The Canadian dollar will become very weak. Okay, because what that means is that inflation is still persistent, the cost of living is still quite high, and all of the different things that come along with it. All right, so looking at all the CAD pairs, I'll do it justice by starting with the major pair Canadian dollar, which is USD CAD. Now, USD CAD is the only major pair that does have the Canadian dollar in it, so it's only right to go through it. Now, I have been through USD CAD before, and as we've been looking at, the price was in a range of accumulation, which was soon going to be broken out of. It's just the right news had to do that reaction, and this is what we've had here. Now, with USD CAD, there are a few options as to what I expect the price to do. One of them is we have unfulfilled efficiency of these highs right here into supply. Now, it may not look like it until I zoom in, but if I use the body of supply here, which is the true supply liquidity of the market here, if I just draw this here like so, you can already see without me zooming in that, now I will zoom in now, that the price actually didn't return into supply with this short that happened. And that's why you can say in this way that the short was really like a struggle short. Even though it did drop, it was a lot of bullish retracement before the price drops down again and etc. And when the price was ready to go long, it was pretty easy for the price to do the 433 plus pips it's doing right now. Now, I want to see how the price reacts in here. And I also want to see how the price reacts at the high of November over here. Speaking about the Canadian dollar, if it is going to be something that becomes a bullish reaction, then we should be looking for USD CAD to push short. Now, I want to see what the price really, I'm waiting for this reaction here. This is my main thing that I want to see, okay? Once price gets in here, as it's pushing right now with Federal Powell's speech right now, we should be looking to see what the reaction of the market will be. Now, the market is reacting very strongly, like extreme. You can see over here, there's a lot going on right now. But I'm still not trading because I'm not going to be moved by just the market jumping up and down. Even though the only pair I am annoyed about is that I was in gold from over here. Price came into a H4 area and did a weekly induction, and then now it's pushed short. Now, I watched this trade go in front of me, and I should have just took the H1. My aim was to go for the M15 up here, and I have a pending order here. I just wish I just took it from where it was, unfortunately, but it's fine. It can happen. All right. Now, with USD CAD, which is the first, the other pair that I was looking at is a cross pair, actually, and it was Euro CAD. Now, I already have a mark in here, but I wanted to go through the breakdown so that you can see it. So, pulling up Euro CAD now. Euro CAD, to me, has got some good possibility of going short. And the reason for it is, looking at the structure here, we have a very strong and large H4 area of supply. Along with that, the market has, now this is interesting because of the number of wicks here. Now, the number of wicks does have a meaning as to what the price is trying to say here in terms of price action, but we've had a lot of wickage above the previous weekly high. Now, with that, you can see prices having a reaction based on the news, and the Euro CAD is starting to descend short. Now, what I would say is that Euro CAD, to me, has the potential to at least pull down a few, maybe about two. From here, I would say down to at least the low of January, because last time I took this trade, if you guys can remember, I was in this short. What the price had done is that I was expecting the price to take, if you see the two lows, we have the low of February, the low of January. I was expecting the market to take the low of January, because between these two lows, the low of January is, even though my markings may not show it, is about 2.7 to 3 pips lower than this low. So we don't have an induction of the low. So my expectations was for something of this caliber, and it seems as though price has started to fulfill that. Now, in terms of a setup, really what we should be looking for now, in the case of EuroCAD, which is why it's not my highest probability trade, is that if I stuck with the H1, the next nearest swing low, according to theory, all right, would be all the way down here. And the price actually was to come down here before returning for an entry into supply, that would cause a bit of a obvious move, which everybody will be latched onto. And remember, the market likes to do movements that are not obvious. So, you know, in my thinking from that regard, my second option is that we could see where we've had 1, 2, 3, 4, 5 wicks above the high. The highest is this one. So if we use this swing low as a marker, we could say it as another form of market structure break. That price could break structure beneath here, and we could simply look for a return here. Now, from the way the price is reacting at the moment, we do have the perfect concoction of news throughout this week to allow the Canadian dollar pairs to give us an entry before the news happens. But I'm still always going to be wary because the Canadian dollar news is kind of like the Euro news, where it has these crazy spikes that it does, and it just doesn't give you a chance to really save yourself. So with EuroCAD anyway, this is my second pair I would say I'm looking at out of the pairs I'm expecting the price to give us. Okay, and structurally, we have two options for a break of market structure, either from here or from here. Either of these will give us a market structure break and a return for entry into supply. And I'm expecting the price to take the low of January. That's really my target. Okay. And as simple as now, I'm not trying to be so complex with the discussion, because complexity doesn't always mean execution. And the key is to be able to execute trades. Okay. So that's my focus, to make sure that we execute. Okay. Now, another pair that I haven't actually looked at and I will explore with is CAD Japanese yen. Now, I'm going to go through CAD CHF and give you the breakdown of what exactly I'm looking at. Why is the highest probability pair out of the set that I've looked at in terms of Canadian dollar pairs? Okay, but I would say that we can also look at CAD Japanese yen, and I often do when I do want to find a trade for Canadian dollar news. All right, so let's get on with it. So CAD CHF, I'll go through every time frame I looked at. So starting at the daily time frame here, in this case, I think CAD CHF presents beautiful opportunity, and I think is a very sound pair to use for teaching. And as I displayed with my students today and have given them description on every angle of this price action, I can say that off the bat, I think that CAD CHF is a really powerful pair. And even though the structure of the price may not seem so amusing, there is a lot of information here that the market is telling us. Now, starting off with the information here. So if we look at what we've got here, the price has been in a range of accumulation for just over, I would say about 5 weeks, close to 6 weeks. So from the last week of January into the whole of February, and I guess just about the beginning 2 days of March before the price really got to the bottom of this range. Now, I would consider the beginning part of this week a part of this range. Okay, this is the first thing. Now, this is not a range as in a range in trend that, you know, I was taught where buyers and sellers are matched at, you know, 50-50. Is that doesn't mean anything, to be really honest. And I used to think that way for many, many years, because that's what I was taught. When the price is in a range, it means the number of buyers and sellers are equal, which is further from the truth than, you know, you could ever know, you know, because institutionally in the algorithm of the market, accumulations, which is what they're called, are the birthing place for major changes in price direction. So reversals are really birthed from ranges. Okay, I want you to remember that reversals are birthed from ranges. Now, why do I like this trade? So starting off with the most simplest thing here is that the price has taken the low of February. So we have an induction of the previous monthly low. And what's key here as to why I like this trade is that when we look at the observe the highs, okay, the high of March hasn't interacted with the high of February. So we have a directional situation where the price has taken the low of the previous month without taking the previous high. Okay. Now, my expectations is that we should be looking for a long based on this price action. And it's very interesting that, you know, of course, the news has kind of alluded to the consensus that the interest rate may stay the same. Governor Tiff has said they may do. Now, whenever a central bank governor says it may happen, it's going to happen. The same way they said that inflation, is not persistent and is transitionary. And then before you know it, inflation is ripping everybody's accounts to shreds. This is what Jerome Powell was saying, that it's so-called transitionary. But this is exactly what I mean when we talk about, price action and price. So looking at what we have here, this gives me great confidence that we do need some structural long. Now, there's an algorithmic level just beneath this low, which is something where I would say this is my cause for concern. Cause for concern, why? I'll explain. Now, the cause for concern really is more on the side of whenever there's high impact news, there's two things that the market always does. Either it manipulates you to go in the complete wrong direction. So when you're supposed to be selling, you're buying, or it allows you to get into the right direction, but at the wrong time. Okay. Those are the two strategies. If you were to summarize the strategy of how the market tries to destroy retail traders' accounts and successfully does 90% plus of the time, is by either you get you to be manipulated by the price action you see to trade the wrong direction and your stop loss gets hit, or to get into a trade too early or too late, okay, but it's the correct direction. All right, so with this algorithmic level, it gives me thoughts to say, and this is what my thoughts are, that we may actually have a second reaction, maybe to take the low of today into tomorrow, or the price may actually just dip there today, okay, and come back to this algorithmic level. Now, there's no question that we're in demand liquidity, because this red candle here is the last bearish candle before the price changed direction. If I go over here, this whole red area is demand. So we definitely are in a strong area of demand liquidity, but we just need a trigger to get us out of this range, which has happened today, which is not a coincidence either. So looking at what we've got here, all right, and you can see my markings over here that we have. You can take a screenshot if you want. My suggestion is this, which is exactly what I've told my students. If I go to the H1 time frame, okay, and I draw out the low that we're looking at, which is this low right here. When I go to the H1, all right, the algorithmic level low is beneath here. If I go to the D1 just to show you, it's right here. Going back to the H1, we do have market structure break. Now the low being taken is here. So this is the last swing high before this reaction happened, this induction of the previous low. So we do have structure break. I guess my only problem I would say is the lows that we have here are too close together for me. They're too close to equal, which means two things. And I'm almost done with what I'm saying in this video. Okay. I would say if I leave you with this, there's only two things that can potentially happen. Either price doesn't interact with the lows and just continues going long, and the Canadian dollar news gives us what we're looking for, or, and here's the part where there's two sides to it. Either, okay, the market takes this low before the news. So into tomorrow, we will wake up and the price has taken the low of the previous day and given us one more inductive move before we go long. Or, and this is the biggest OR, is that at 3 p.m. UK time or whatever time you are in around the world, the market the news may spike down and clear all of the stop losses and maybe even trigger sell stops by doing so to turn the market the other way, but give us a huge spike that just dips beneath this low and gets us here. Now, what would that do? Well, if you're in this buy prematurely right now, if you have your stop loss even at break even, when the news comes out, even though you may not lose anything, you're still not going to get what institutions will be making when the price goes long. If you take the buy entry too late and the news comes out, you could be spiked out quite badly. Okay, remember, when volatility is high on brokerages, liquidity is low. So even if you have a stop loss at break even, you could still lose money, because if there's no liquidity or levels open for your stop loss to be closed at, you put yourself in a position where you could end up being, stopped out at a loss. It's happened to me many times. So these are my suggestions, guys. I wanted to keep it short and sweet. I hope you enjoyed this video. I won't keep you longer than that. I hope you guys enjoyed, and leave your comments, like, share, subscribe, share with your friends. Thank you for all your love and sharing and comments, and I'll catch you on the next video, guys. Everybody take care.